Okay, I think we're ready to get started here. Angelica, we're good to go?
Yep, all good.
So welcome everyone. My name is Pardeep Sangha. I'm with the Wishpond and in charge of investor relations. I want to thank you all for joining us today and welcome to Wishpond's 2021 fiscal second quarter financial results conference call. Joining me on the call today are Tajskandar, Chairman, Founder, and CEO of Wishpond, and Juan, Leal, the company's CFO. This call is being recorded. We will be having a question and answer session at the end of the call. You can submit your questions through the Q&A button at the bottom of the screen. I trust that everyone has received a copy of our financial results press release that was issued earlier today. Listeners are also encouraged to download a copy of our quarterly financial statements and management discussion and analysis from sedar.com. Please note that portions of today's call, other than historical performance, include statements of forward-looking information within the meaning of applicable securities laws. These statements are made under the safe harbor provisions of those laws. Forward-looking information statements involve known and unknown risks, uncertainties, assumptions, and other factors, many of which are outside of Wishpond's control, that may cause the actual results, performance, or achievements to differ materially from the anticipated results, performance, or achievements implied by such forward-looking statements. These factors are further outlined in today's press release and in our management discussion analysis. We provide forward-looking statements solely for the purpose of providing information about management's current expectations and plans related to the future. We don't undertake or accept any obligation or undertaking to release publicly any updates or revisions to any forward-looking statements to reflect any change in our expectations or change in events, conditions, assumptions, or circumstances on which based, except if it's required by law. We use gross profit, gross margin, and adjusted EBITDA on this conference call, which are non-IFRS and non-GAAP measures. For more information on how we define gross profit, gross margin, and adjusted EBITDA, please refer to the definitions set out in our management discussion and analysis. And with that, let me turn the call over to Mr. Ali Tajskandar, Chairman and CEO of Wishpond. Ali?
Thank you very much, Pardeep, and good day, everyone. We hope that you are all keeping safe and healthy. We truly appreciate everyone for joining us today. On today's call, I will first provide some general commentary and an update on the quarter, followed by our CFO, Juan Leal, who will provide a financial summary of our results. I will then come back and provide some commentary on our outlook. Second quarter 2021 was another tremendous quarter for Wishpond, as we once again achieved record quarterly revenue with 73% year-over-year growth. In fact, our US revenue grew by over 100% despite the negative currency headwinds in the quarter. We are also very pleased with the progress we have made with our first two acquisitions, Invigo and PersistIQ, which continue to perform very well. We are now beginning to witness the synergistic benefits of our acquisitions through cross-selling the company's products and services across the different parts of our growing organization. The integration of Invigo has been going very well. Invigo is now actively taking advantage of Wishpond's shared services, such as our account management resources, and we have set up a sales team to further grow Invigo's revenue. During the second quarter, we launched our appointments product, which came from the Invigo acquisition. The appointments product enables businesses to offer automated scheduling to their clients. We have already integrated this new tool into Wishpond and have started promoting it to our current clients. Meanwhile, we are also starting to see positive results from our PersistIQ acquisition. On April 22nd, we launched our new fully managed outbound sales solution, which features an enhanced sales automation platform and a service package that gives B2B small business owners access to PersistIQ's award-winning technology, outbound sales strategies, and a team of sales experts. The integration of PersistIQ has been going very well, as we are currently in the process of migrating PersistIQ's operations to using Wishpond's shared services. We also set up a sales team that focuses on PersistIQ's products and services. This team is starting to realize positive initial results that we expect will only get better in the coming quarters. I will go into additional details later in this call today, but first I would like to turn the call over to our CFO, Juan Leal, who will review the financials for the quarter.
Thank you, Ali. Thank you. I am pleased to report that we had a very strong Q2 results for the 3 months ended June 30th, 2021. Our second quarter 2021 results are as follows. Wishpond achieved record quarterly revenue of $3.2 million during Q2 2021 compared to revenue of $1.9 million generated in Q2 2020, an increase of 73% year over year. The increase in revenue was primarily driven by higher organic growth from the company's incremental investment in its sales team and inorganic growth from the positive contribution of Invigo and PersistIQ acquisitions. Wishpond's revenue was negatively impacted in the second quarter by the weakening of the US dollar. Had this decrease in exchange rate not occurred, the company estimates consolidated revenues would have been higher by approximately $273,000 as compared to the exchange rate in Q2 2020. Revenues were also negatively impacted by an initial acquisition accounting adjustment related to PersistIQ's deferred revenue, resulting in a negative impact of approximately $133,000 in the second quarter. Wishpond achieved gross profit of $2.2 million, representing an 86% increase from Q2, driven by an increase in overall revenue. Wishpond achieved gross margin percentage of 69% during Q2 2021, compared to 64% in Q2 2020. During the quarter, we recorded an out-of-period adjustment that resulted in lower cost of sales. Had the adjustment not been recorded, the gross margin in the quarter would have been 67%. During Q2 2021, Wishpond had negative adjusted EBITDA of $320,000 compared to positive adjusted EBITDA of $202,000 in Q2 2020. The decline in adjusted EBITDA is attributable to a higher level of operating spend, primarily as a result of increased overhead from becoming a public company, an increase in headcount in the company's sales and product development teams in preparation for future growth. As of June 30th, 2021, Wishpond had $10.1 million in cash and cash equivalents. The company had no long-term debt as of June 30th, 2021. As of June 30th, 2021, we had 190 full-time employees and contractors compared to approximately 124 full-time employees and contractors as of December 31st, 2020. The increase in headcount in the first half of the year is attributable to the additions of Invigo and PersistIQ employees, as well as an increase in the size of our sales and R&D teams. On June 7th, 2021, we announced that the notice of an intention to make a normal course issuer bid was approved by the exchange. Under the NCIB, the company may acquire up to an aggregate of 2.6 million common shares, representing 5% of the issued and outstanding common shares of the company as of June 3rd, 2021, for a one-year period from June 11, 2021. The board of directors believes that the recent market prices of the company's common shares do not properly represent or reflect the underlying value of the shares. As a result, depending upon future price movements and other factors, the board believes that the purchase of shares would be a desirable use of corporate funds in the best interest of the company and its shareholders. No shares were purchased in conjunction with the NCIB during the 6 months ended June 30th, 2021. After June 30th, we have purchased over 15,000 common shares at an average trading price of 1.33 per share in conjunction with the NCIB. The 15,000 common shares purchased under the NCIB were subsequently canceled. As of the end of the second quarter, the company had approximately 52 million fully diluted securities issued and outstanding. Overall, Wishpond is in a very strong financial position with a healthy balance sheet, solid monthly recurring revenue, and very good visibility to revenue and cash flows for Q3. That is my financial update, and I turn it back to Ali for more details.
Thank you very much, Juan. I would like to provide a couple of additional updates for the quarter. On May 17th, 2021, the company announced the promotion of Nicholas Steves from Wishpond's Chief Product Officer role to General Manager of Wishpond's PersistIQ business unit. Nick has been with Wishpond for 10 years and has held many leadership roles, including marketing and support, along with building Wishpond product management department. We believe Nick will make a great leader for PersistIQ business unit. We would also like to welcome Will Schmore as Wishpond's new Director of Product Management. Will, who is an experienced leader in product management, design, and entrepreneurship, takes over Nick's former product management portfolio as Nick has transitioned to focus his efforts on the PersistIQ business. In terms of US listing, During the second quarter, we also achieved a significant milestone with our new US listing. On May 12, 2021, the company's common shares began trading on the OTCQB venture market under the ticker WPNDF. Shortly thereafter, on June 24, 2021, Wishpond's listing on the OTCQB was upgraded to the OTCQX best market. We believe our rapid uplisting from OTCQB venture market to the more mature OTCQX market is a reflection of the strong business case that we presented to the OTC exchange. Furthermore, on July 14, 2021, we announced that the Depository Trust Company, or DTC, has made Wishpond common shares eligible for electronic deposit and clearing. The company believes that the opportunity to clear and settle trades in its common shares on the OTCQX should provide a more seamless experience for its US shareholders and increase liquidity in the stock. Our outlook remains very positive for the entire company as a whole. Wishpond's goals for 2021 are as follows. 1, increase the company's MRR, monthly recurring revenue, through organic growth and acquisitions. We are expecting a stronger MRR growth in Q3 than in Q2, which was negatively impacted as a result of the weakening US dollar and one-time accounting adjustment related to Versus IQ. 2, accelerate the company's organic growth profile. We have doubled the size of our sales team from what it was prior to Wishpond becoming a publicly listed company. We expect this expansion in our sales team and internal capacity will result in increased organic growth in the coming quarters. 3, return to positive adjusted EBITDA in the second half of the year. The investments made in the first half of the year in expanding Wishpond's sales and product development teams are already beginning to have a beneficial effect on the company's financial performance. Hence, we are expecting improved profitability in the second half of 2021. We believe the increased expenses in our sales and R&D teams in second quarter were necessary investments for long-term growth of the company. 4, follow a disciplined acquisition and capital allocation plan. We are very pleased with the acquisitions of Invigo and Versus IQ and have developed a robust pipeline of additional acquisition opportunities. The Invigo and Versus IQ acquisitions have proven to be accretive to Wishpond's financial profile, and we are committed to following a similar strategy and plan when making new acquisitions. We have a strong balance sheet to execute on the desirable acquisition opportunities in front of us. 5, invest in research and development. Our R&D and product teams have been doing a tremendous job of launching new products and services and expanding the company's intellectual property. We anticipate launching several exciting new product enhancements and features in the coming quarters. In closing, I want to thank all of our employees at Wishpond whose hard work has elevated the company to another level since going public. Also, I'd like to thank you all for joining us on this call today. The capital markets have been very supportive of our vision and have provided us with the funding needed to pursue our goals. We look forward to providing an update next quarter. Thank you. I will now hand it back to Pardeep.
Thank you, Ali and Juan. We will now open the call up for questions. You can send questions through the Q&A chat down below at the bottom of your screen. I do have some questions from some analysts already. We'll start off with Daniel Rosenberg of Paradigm Capital. Can you talk about the changes in the expectations for strong growth in the back half of the year, given the Delta variant and some lockdowns that may have occurred, delaying marketing spending?
We haven't seen any indications that would tell us we're going to experience lower growth than we've seen earlier this year. And in fact, we actually anticipate faster growth given all the things that we just talked about. And also, if you also remember last year during the height of the pandemic and when it was true lockdown in terms of business spending, we had one of our strongest organic growths. And I think we are really well positioned for helping businesses, especially at a time when they need to carry business more online than offline. So we don't see a slowdown in our, obviously, based on what we can tell right now, we don't see any indications that would tell us we are going to experience lower growth or slower growth.
And just to add to that, something to keep in mind is that we target primarily SMBs. And in times when there's lockdowns or things that what we're experiencing or we're expecting to experience in the second half of the year, those are the companies that need an online presence the most. So while they may be cutting back on things as advertising and other things, many of them will be actually investing even more on establishing that online presence that they need to be able to market themselves. So we don't foresee any major issues from that.
Great. Second question from Daniel Rosenberg of Paradigm Capital. With the new product launches, any updates on how customers are responding and thoughts on how it's impacting retention?
Yeah, that's a great question. So the launches have gone great. We've actually already, for example, for the appointments product, we've already launched a subsequent V2 based on the feedback that we received. The adoption has been great, but it's still early days. And I think it's going to take a little bit of time before it becomes a more meaningful part of our sales strategy. But so far, the indications are quite positive and appears to be helping us with retention long term.
Moving on, we have a question from Gabriel Leal from Beacon Securities. Gabriel asks, with the benefit of several months with the new sales hires, what sort of organic growth rates is management now targeting?
Well, with the 73% year-over-year growth that we see right now, we, more or less, not 100%, but more or less, we think half of that is coming from organic growth and half of it is coming from the acquisitions we made. And as we talked about it really was about 100% if it wasn't for the US exchange rate headwinds that we had. So the organic growth has been very strong, and now the acquired companies are also becoming part of our organic growth profile. We're internally, at least, we're kind of counting on similar organic growth rates than historically we've seen. Obviously the sales team last year, we had 12 account executives. We've already grown that to double, slightly more than 24. And, that takes a little bit of time to ramp up, and already we're seeing improved revenue and growth as a result of that.
Next question from Gabriel Leong as well. With regards to your comments about returning to EBITDA positive in the second half of the year, will that be positive for the full second half? Maybe you can just provide some more color on that.
Yeah, we expect in the second half of the year to reach EBITDA profitability, or adjusted EBITDA profitability again, and for the whole second half to also be positive. That's correct.
Yeah, and if you recall, during our Q1 call, we were explaining how we're making significant investments in Q1 and Q2 to build capacity within our teams to be able to sustain the growth that we're expecting to come ahead of that. So now that we're starting to see some of that growth, and you can see it in our gross margins going back to normal levels, if not higher than normal levels at 69% this quarter, that's an indication that, again, sales are starting to catch up with the capacity that we've built, and we expect to see the fruit of that coming into Q3 and Q4.
And Gabriel did also ask a question about number of account executive numbers and total headcount. I think you guys did sort of address that already. Why don't you just mention that again, just for that everybody's sake?
Yeah, for sure. So last year we had 12 account executives. Account executives are those quota-carrying salespeople that we have in the team, and we've already doubled that to about 24. And for next year, we plan to more or less double that again. And so, in terms of hiring for salespeople, we're on track and ahead of schedule.
And what gets again, Juan, if you can just go over your total headcount again that you mentioned in the preferred remarks.
Total headcount is over 180, which includes full-time employees and international contractors. Okay,
moving on. Christian Segro of 8 Capital. His question is, could you quantify the mix of self-serve versus full-serve revenue? And is there anything else that we should think about in terms of broader revenue segmentation?
Yeah, the mix has remained more or less similar to last quarter. So it's about half and half, 50% self-serve revenue and 50% fully managed. And you might recall also fully managed itself is hybrid itself. So it's not just services and technology.
And then if you can talk about pricing, product pricing, and the impact of sales process. This is a second question from Christian Segro on 8 Capital.
So we've been experimenting with different pricing and packages. For example, for our self-serve packages, we experimented with higher price points of about $250 per month that are not fully managed, but they're not, they're a little bit more hand-holding than the normal traditional self-serve plans that we've had. And it actually went well. We give a little bit more hand-holding up front. But it's not conclusive yet, and it's still in experimentation phase. So that's one side of it. The other side of it, going into Q3 and Q4, there are other additional pricing segmentation and optimizations that we want to actually work on, specifically to increase the opportunity for us to upsell. So as an example, with the appointments booking product, to be able to charge slightly more as opposed to having it bundled as part of the all-in-one package. So those are some of the additions that we're going to introduce in the coming quarter or two. And the acquisitions we made also contribute greatly to that. So being able to cross-sell and add Purchase IQ packages to that, and we go Ever Genius appointment booking or SMS packages and so forth is going to be significant in that.
Follow-up question from Christian Segro of 8 Capital. How does the company balance investment in the business with its profitability goals, and sort of how are those priorities line up?
Yeah, that's a great question. So we are very aggressive with our growth targets and ambitions, and as the analyst consensus currently stands, 70-75% growth is expected for this year compared to last year. Having said that, we really believe in responsible growth, and we would like to get to EBITDA profitability very quickly, and we're on track for that already in Q3. And we also believe that being able to carry and balance our own operating expenses allows us to use the funds we have better for growth. As an example, making all of them or substantially all of them available for acquisitions as opposed to investment in our own growth. And at this point, we're investing the cash flow we're generating from the business into the growth of it. So we think we can continue to have very aggressive growth targets while balancing our cash flow and EBITDA.
Moving on to Chris Thompson of PI Financial. Can you talk and give some more color of cross-selling wins and examples?
Yeah, it's still early days, but it has been actually quite interesting. For example, Wishpond team has been cross-selling and selling some Purchase IQ packages, not in large numbers yet, and that's still work in progress. Similarly with Invigo and Wishpond, that has been happening. In fact, we've even had clients that are coming to Wishpond, and then we see their medical, we pass them on to Invigo because we know that they're specialized in that. The products within Invigo are already being integrated within Wishpond, and the appointment booking product is already being used by a lot of our existing clients and is becoming a more substantial part of what we do. I think it's fair to say it's early days of integrating all of those in terms of cross-selling opportunities, but so far the indications are very positive.
And another question from Chris Thompson of PI Financial. This is probably more directed towards Juan. If you can talk about the increase in gross margin in the quarter, impact of potential cross-selling to increase that gross margin, and also what is your sort of longer-term target gross margin?
For sure. So if you recall, in Q1, we had gross margins about 61%. That increased to about 69%. So Q2. One thing to note there is that we had an out-of-period adjustment impacting the Q2 margin, gross margin. Had that adjustment not been recorded, it would have actually been 67%, which is still very positive.
Well, and I guess one thing to add to that is that really Q1 margins should have been slightly higher. So that's where the adjustment is.
Yeah, but overall, the point of that is to show that, again, as we were mentioning earlier, and we've been saying that since before the year started, during Q1 and Q2, we were going to be making some big adjustments or big investments in building the capacity of the team. We said we're going to grow the sales team, which takes capital, because it typically takes a certain number of months for account executives to be fully ramped up. We also hired significant people in our service delivery team, designers, copywriters, strategists, or like all the different people that are going to be fulfilling the services, so they're fully trained and in place, so that when the revenue comes in, they're ready to start executing. So I think Q2's gross margins are just a reflection of sales continuing to grow and then catching up to the capacity that we've built. And we expect that to continue into the following quarters once we start reaching EBITDA positive again during the second half of the year.
Okay, going to some of the other live Q&A questions. Can you speak on the, maybe provide some color on your pipeline, your acquisition pipeline, and also just in the past you've talked about focusing on marketing agencies versus technology companies for your acquisitions. So just give some more color on the acquisition sort of future here.
Yeah, for sure. We have a very strong acquisition pipeline, and we have several parties quite close to the end of the pipeline and ready to move on. And you should expect to see those news and acquisitions in relatively short order. In terms of the types of acquisitions we're going after, as we've mentioned, is technology companies and marketing agencies. And it is fair to say we will probably focus more initially, and we currently in our pipeline, that is a tilt that we have, is more towards the technology ones. And it just makes sense to put more of the technology pieces in place and start integrating them into the platform, and then possibly go back to making more acquisitions with marketing agencies and bring customers to that expanded product suite.
Okay, and another sort of live question coming in. This is, can you comment on the drop in deferred revenue compared to December 2020 quarter? Are there seasonal factors, or I guess in this case, a large customer order that came in the fourth quarter? Maybe you can comment on that one.
Yeah, for sure. So as we've mentioned, we have a large customer that typically operates through prepayments. So they typically prepay a large portion at the beginning of a given quarter. They might prepay for, say, 6 months or three or four, even sometimes even for the whole year. So that's why you see in our statement of cash flows that we typically have some large fluctuations in cash from operations. As of Q4, you saw a large increase in cash from operations, and Q1 and Q2 you see lower numbers. Most of it is driven by that prepayment, which is being drawn down as they use the services, which is why you see the deferred revenue being decreased as we recognize the revenue on a quarter-by-quarter basis.
Great. Can you maybe talk about Juan as well, just any insights on the stock-based compensation and what you might expect that going forward? Just any commentary on that, Juan?
No specific commentary on that, other than the fact that we obviously went public in December. So all the stock options that had been issued as a private company were converted to public company shares, and those basically we had a large issuance in December to incentivize all the management team and all the key employees and directors going forward now as part of the public company. So again, there was a large issuance of common share of options at the time. And those will basically be continued to recognize in our financial statements over the length of the vesting period, which is 4 years. Nothing else major has happened beyond that point, except for a normal course issuances of stock options for new key employees or existing employees.
Okay, great, thanks. That's about all that we have for today. So I'll send the call back over to Ali to close.
Thank you very much, Pardeep. In closing, I want to thank everyone once again for joining our call today. Thank you to the analysts for their questions and the audience. Everyone, please stay safe and healthy. We wish everyone a safe and joyful summer. Thank you very much.